Peace and love, everybody. Welcome back to the channel. We're gonna get started here in a minute uh, with the True Weekly Market Analysis Report. Do me a favor, if you haven't already, hit the like button and hit the subscribe button to help me grow the channel. Uh, that's the way YouTube's algorithm works. um, Let me just share this video. Do me a favor and hit the share button as well. Uh, Help me get the word out and whatnot. There we go. All right, cool. So let's get right to it. Let's get right to it. We're going to look at the market as I ran out of water. We're looking at the market, the S&P, the overall market. And last week, I said that after coming in, we had a short week last week. We only ran 4 days. And I was saying that, I was bullish on the market at the time. And in that time, I also said that I anticipated that we would push up to this level, to the 420 level, the 4,200 levels. That did not happen. It got stuck at resistance around 417 was the high of last week. So it actually didn't go anywhere. It didn't do nothing but consolidate all week long. And I said that it would happen. I just thought it would happen up here in this zone. If you look to the left, you see that that's what it does. It tends to consolidate for about a week and a half in this particular area. Excuse me. However, last week it consolidated just a little bit lower than that. I'm still bullish on the market and whatnot, and it's a thing where it's about timing, getting in at the right times. However, I like what I'm seeing with my moving averages. We have the 10-day moving average that's moving. Is right now it's nearly at the low of Friday's candle. So that's telling me that if we continue to move a little bit, probably to 50% of this candle before we get a retrace, but we have support. We have support at this 10-day moving average, and the way it's pointing straight up, and that's an indication that that it could push price higher once it hits this moving average. And hopefully that's what it takes to break out of this resistance. As you see, I put, some alerts on my chart to get an idea of when it breaks out of basically this little box or this little zone here. So it's been bouncing off of resistance and support. 407, 4070 is a very strong resistance, on SPY in particular, 407. So it bounced off of that twice. That's the retest. It came back. It's been on a nice little run the week prior to last week. It was on a nice little run. And, SPY's been dropping basically since January over here, but there's been ebbs and flows. There's been times to make money to the upside and whatnot. But so what it did really this week was these are what I would call, they're consolidation candles, but I call them resting candles, right? It's basically a fight going on. And if you were paying attention to SPY this week, man, I was saying that, joking around on Facebook, like how it was a heavyweight fight going on. It was really, they were trying to drive price below the 4070 level. And The buyers were stepping in, So judging it by the way it's looking right now, I like the fact that I got my 10-day moving average right up here at the low of Friday's candle, which is giving us added support. And I love the way that the 20-day moving average is starting to curl, starting to hook. So it all could change at pre-market and whatnot. Things change. But as it's looking right now, it looks like money is flowing into the market. And this may be the time for us to break out of this zone. I'm still bullish up to these levels, to the 4,300 levels. See if it could break through this resistance. But again, it may get choppy if it runs up to this level, it may get choppy for a minute too. So you got to be mindful of that, of what's going on in the overall view of the market. Look to your left, see what's happening over here. So that's my opinion on the S&P headed into tomorrow. But we'll reevaluate it once we get to that point. Nasdaq as well. It's these moving averages crossed up. They crossed bullish last week, so that's a good sign. Right now, it's moving up. It's up. The Nasdaq is up 0.42%, almost 0.5%. So we'll see how that. It's looking pretty healthy right now. I like the fact that these moving averages are crossing up on it as well. Let's look at the Dow. The Dow did so. Everything pretty much did the same thing last week. Just consolidated, and that's like traders. We don't like to see those days where it's just those choppy days where it's just really not going anywhere. Yeah, there's opportunities to make money, as I demonstrated in the pre-market videos that I do, and even went live last week and was showing how the market runs and things like that, and entry points and stuff like that. So I still like it to the upside. Everything is looking healthy right now. As you can see, the Dow has the 10-day moving average right there. It has not touched, but at some point, it's already above the low of Friday. So at some point, I expect a retrace. Probably when it gets to about 50% of this candle, it'll probably get rejected, come back, touch this moving average, and we get some pop. That's what I'm saying right now on a Sunday night. We shall see when the morning comes. Good evening, Brother Rodney. How you feeling, bro? Peace and love to you. So that's how the Dow is looking right now. Then let's look at Bitcoin. I've been watching Bitcoin all week. Bitcoin runs 24/7. And last week, what was the 30th? We had a short week. So this was on Sunday's candle, actually. We got this big move on Sunday, and the stock market was closed. So, I trade stocks that run with Bitcoin, like Coinbase and, Riot. So I was looking forward to it to have a continuum, but then on Monday, it took a dump on us. Actually, this was Monday's candle, and this was it flushed out on Tuesday. So it's been consolidating, as I said in last week's video. It's been consolidating for a long time in this little one area. It has broke out. It came back and retested this trend line that I had going from back here. It's been straddling it and whatnot. you see I got these alerts on here from these lows to see weekly lows, and to see if it will break out of here, break out of this, break this support level, and it has held it. So, and then today, only not less than 3 hours into the market, we see a nice surge. So, if Bitcoin is in and it's taken out most of the highs of last week, it's already, let's look at the weekly candle. Yeah, it's already taken out half of last week's gains. So that's a good sign. With only 3 days into the into the weekly candle, it's already popping. So that's a good positive sign headed into the market tomorrow. But we shall see how things look in pre-market. So be sure to watch the pre-market video in the morning. I got a few tickers. Let's look at some things that we called last week. Some earnings plays. Chewy went into calls on Chewy and the weekly candle. Let me get all of this off of the charts right quick so I can show you what I'm talking about. This weekly candle, Chewy went to earnings on Thursday, and they popped, came down and filled that little gap right there, that because it opened up here. It opened pretty high and it pulled back, closed the gap, and now it's running. So I believe it's still some move to the upside. I haven't changed my analysis on that to this level of 32.67. That's the high that it has to take out. I believe that we can get there. Let me put my stuff back real quick. We see there's a cross that's going on with the DMI. The directional move is starting to cross up. So that's another positive sign. We're losing some of the ADX, but it's still high. It's still 37. The ADX is 37. So anything over 20 is a strong move. So the bearish candle, the red candle is dropping, and the green candle is surging. Will cross soon. So that's a good sign for Chewy headed into next week, especially if the market continues to surge as it is. As I'm looking at Bitcoin right now, it hasn't even been in session for 3 hours into the daily candle, and it's already up 3.57%, 3.5%. So that's a pretty positive sign. The Nasdaq is up 0.5%. S&P is up nearly 0.5%. And even the Dow is up 0.29%. So things are looking good right now. We will see. We will revisit it in the morning. So for those who got into the Chewy play and whatnot, I hope you're still holding, and you got some money, or it's been profitable for you. But it's probably another move to the upside. Still bullish on Chewy. Also, we called CRM last week, and we were able to get a pop coming out of earnings as well. However, it opened, it surged, it hit my trend line, and then it got rejected and pulled back with the market. So, but the very next day, that Thursday, got a nice surge. And then Friday, this is a pretty weak candle, but the market, it kind of pulled with the market. So am I bearish on it? Am I bullish on it? Am I bearish on it? What is it going to do? I'm not sure, right? I'm out of it. I got my money and ran, and I'm really not. I do like the fact that the 10-day average, moving average moved. The 10-day and the 20-day moving averages have crossed. And so that's a positive sign. And then the directional move is pretty strong. It's at 27.38. which is anything over 20 is considered a strong move to the upside. So it still looks good and whatnot. I just there's a few things that I found that are better trades. So I was able to get some money off of this, and now I'm done. You know, not trying to fall in love with it. You know, what will it give if it gives me an opportunity to get back in? Will I possibly? But again, it's not on my radar like that. I got my eye on it, but not. I've gotten some money off of it, so I'm good. So that's CRM. Also, some disappointments from last week, man. Target was a disappointment. Target was a disappointment because Target came into last week pretty strong, right? And this was the Friday's candle. And I said on the video, I said, man, I wish it had have taken out this high right here and closed outside of this high right here. And it didn't. So I was a little skeptical about it, but optimistic at the same time. And then the market opened. And as you can see, that Monday's candle, that red candle, it just opened up and it took a dump. It took a dump Monday and Tuesday. I'm sorry, Tuesday and Wednesday, because last week was a short week. But it got back some of its gains on Thursday, got back a lot of it, and then got back a little bit more on Friday. So where's this thing going? It didn't perform the way I wanted it to last week. I still have my eye on it. I still like to play. If you buy the time, you have to buy the time for it to make its move. I do like the fact that my 10-day moving average is below price and it's curling. So then my stochastic is been oversold for a while and whatnot on the daily chart, as well as the weekly chart. So, but we see that it's starting to curl. If we look at the stochastic from last week, it's starting to curl. So I'm still bullish on Target. It just didn't do exactly what I wanted it to do last week, when I wanted it to do it, I should say. But the setup is still there, is what I'm saying, right? It just didn't happen in the timing of when I would have liked it to happen. So the thing about trading, man, is being patient. And 90% of what we do is predicated on, being patient. So that's Target. Walmart was another one that was a disappointment. Walmart, it was an opportunity to get money on that Tuesday. It popped, it opened, and it just took off, right? But it bounced. And then it just took a dump on Wednesday with the market consolidated, basically. But again, just like Target, the moving averages has curled. The 10-day moving average has curled and is pointing in an uptrend now. And price is right below the moving average, because what it closed at, it got as low as 12.07. The 10-day moving average is at 125.07. No, it moved to 25.09, and then the moving average is at 125.07. So again, I like that, especially with the way the market is looking now. So I'm not bearish on it at all. It just did what the market did last week, which is basically just consolidate, hopefully for a bigger move to the upside. So let me give you a few tickers. This week is not a good week for earnings, meaning that it's not a whole lot of companies that are reporting this week. Let's look at a couple that are. We got um, DocuSign is reporting this week, and I looked at this one earlier, and it's not really looking too healthy. It consolidated as well. I got a trend line right here as a level of support. It is below price. The price is below my my 10-day moving average. It closed above my 10-day moving average and the 20-day moving average. What I don't like is the fact that the 20-day is not curling. It's just been flat. It's been flat for several days now. It's been pretty much 77, 76, you know, for over a week. So I'm going to stay away from that. There's other things that look better, but they do report later on this week, so I'll revisit them. I don't know why TradingView always gets their dates mixed up, but they report on Thursday in the aftermarket. So I'll be looking at them probably around Tuesday. Also, NEO reports um, this Thursday as well. In the pre-market, NEO. Let's look at NEO. NEO's been doing pretty well, actually. I got in, weeks ago back here. NEO is actually running pretty good. Let me get this out of there. Yeah, NEO has been running pretty good. It's taken out a lot of highs. It's taken out this high, created higher highs from these highs, and it looks to be going up to this level at $20 to retest. I got an old trend line here that if I were to extend it, which I'm going to do, see that it's still prices still above the trend line. Again, we got the 10-day moving average moving in that direction, and the 20-day as well. The price is above those moving averages. So we got two levels of support here as well, and the trend line. So we shall see how it looks in the pre-market. So that's just an idea. Oh, I mentioned this one last week. Stitch Fix is a company I used to like to trade when they were way up on the charts, but it's so low. It's been beat down for so long. Let's look at the weekly to get a general idea. It's just been beat down and just beat all the way down after having a high of 113 in January of last year. It's just pretty much been tanking ever since. So this is one of those stocks where you should be looking at to buy hard shares in, as well as leaps. It's so low and it's so cheap that you're going deep sea diving for this thing, and eventually it'll turn around. So earnings could determine what direction it takes. That was the same way that Chewy was last week. This is why I called it. So we'll take a look at this. They report on Thursday in aftermarket as well. Let me give you a few tickers to put on your watch list for this week. One of them is XOP. Energy stocks have been doing tremendous, for the last quite some time, and we know the gas prices are high and things like that. So this is looking really well, beautiful trend line and whatnot. However, at some point it's so extended that you have to be careful with this, in how you trade it. You got to get optimal entries and whatnot. So, but I'm still very bullish on it, and whatnot. I would like to. I hate that I missed this candle on last Tuesday. This pullback, because this would have been a great entry. So looking for a pullback before entering this, but I'm going to keep it on my watch list and keep my eye on it, and make a determination as to when to enter. But I need a pullback first before I do enter that one, or if I do, you know. Also, another one, AMD. AMD. I don't use scanners, right? So I kind of ended up using a scanner today, and I was already looking at the semiconductor companies. I was looking at SMH and whatnot, and again, it basically did the same thing that the general market did, which is consolidate all last week. So um, again, with the way things are looking in the market right now, um, in futures, if we are to get some type of surge in the pre-market, I'll be keeping my eye on all the semiconductor companies, but namely AMD. It came up on my stock screen. I put in some tight numbers, and when I had like 9 companies that came back, and I didn't know anything about 8 of them, but AMD was on that screener, and looks like it's a lot of money flooding into them, and we can tell by this candle from Thursday. They had a very big pop, a $9 move, and that's what they do. They go up, they move, it consolidated after this big move, which was a $10 move. Consolidated, popped again for $9. $9. And now, look to your left. This is another consolidation zone. So I don't really like this candle here, but I have I understand that this is some tough resistance going on right here at this level. So that explains this pullback. I do not like the fact that it didn't create a higher high. But I'll keep my eye on that for this week. Again, predicated upon the fact that the market is looking pretty healthy and bullish right now. We shall revisit it in the morning, but keep AMD on your watch list this week. And the last one that I'm going to share with you all is based off of, I was looking at this ETF, Jets, which, is airlines. And I was looking at this candle, how it pulled back, but then it reversed, and it pushed back about 55% of the candle. So I was like, that looks like that could reverse. It could reverse right here. So then I began to look at a few airline stocks, and I went to this is the only one I really trade, because it's a pretty solid company. And those, most of the airline companies, if you have done any analysis on their books, on their financials, a lot of them are in trouble. But Alaskan Air Group is one of the better airline stocks that there are. And I really like this chart on Friday. Hate that I missed out on Friday, but it had a very big move, which a $3 move, which is big for this stock. And again, I always look to my left. and see what's going on. When it dropped very hard and very fast, but look to our left. When it popped up and went back to retest this trend line, it went up, very fluidly and whatnot. Mind you, the market was down around these times, and it went up for weeks. What's the high of this candle? $59. The low of this candle is $43. So that's a $16 move, which is a tremendous move for this stock. So I like it to the upside. Definitely going to be looking to enter. It's in the middle of this consolidation box right here. So what I'm looking for it to break out at 50. I got it at 50.07. So I'm looking for it to break out. It breaks out right here, it's gone. I believe it's going right back to do what it's been doing the last three times. It has hit this trend line. This one, it pierced it here. It pierced it here. It broke out, but it pulled back, and it pulled back hard. And when it pulled back, it began to, it did pop and then pull back again, creating a double bottom. And a double bottom pattern, a lot of times you'll get a powerful move to the upside. And that has happened. These candles are pretty big, healthy candles. Then it followed the market on Wednesday and pulled back really hard, but it has surged and taken out those highs. So I really like it to the upside once it breaks out of this box. When it breaks out of this box, we're talking going up here to this $55, $56 level. So it's another one to put on your watch list to keep your eye on this week as well. And so that's all I got. I appreciate all the support. Appreciate you all for showing up and everything. Reach out to me if you need, if you have any questions or any concerns about anything. I'll be back in the morning with the pre-market video. And then, giving you some more tickers to look at, some ways to make some money. All right, y'all, I'm out. Peace and love.